So what's up, guys? So for the recording session for YouTube video, we actually had some technical issues, so the video wasn't actually recorded. So I've taken it upon myself that let me just have the whole session again by myself, just record the whole session again for you guys, so that you guys can, at least those who weren't able to join the session, I knew some of you weren't able to join the session, and some of you also joined late, so that I can just do this for you guys so that you get the whole concept before we move to day 3, which is this coming Monday. So first of all, we are going to talk about candlesticks. Okay, so candlesticks. When we talk about candlesticks, candlesticks are basically the representation of the market. Do you understand? Representation of the price or market. Representation of price. That's it. So candlesticks are basically the representation of price. So all these boxes you are seeing in the market, these boxes you are seeing, these small boxes, they are what we call candlesticks. Do you understand? By default, the candlesticks on your screen are going to be green and red, but for mine I've customized my color, so you have red and gray. Do you understand? So those are the candlesticks. And then the candlesticks has two main parts. Do you understand? The candlestick has two main parts, which is the body and then the wick. You get it? So the candlestick basically has the body and then the wick or shadow. So let me write that down: body and wick or shadow. So the candlestick has two main parts, which is the body and then the wick or shadow. So this is the wick of the candlestick. This is the wick of the candlestick, and this is basically the body of the candlestick. Do you understand? The wick of the candlestick is a thin lining between the body, and this is the whole body. So let me give you a practical example on the screen. Let me give you a practical example on the screen. So this is basically like a candlestick body, and this is the wick. Do you understand? The thin line is the wick, this is the body. This is the wick, the thin line is the wick, and this is the body. Wick, wick, body. Wick, wick, body. So that's what the candlestick basically is. Do you understand? Yes. So we have two main types of candlesticks. We have bullish and bearish candlesticks. Do you understand? We have the bullish and bearish candlesticks. So the bullish candlesticks are the candlesticks that represents price going up. Hold on, let me write that down again. Bullish and bearish. So the bullish candlesticks are the candlesticks that literally have price going up. They represent price going up. And then the bearish candlesticks are the candlesticks that have price going down. Do you understand? So the bullish candlesticks are the candlesticks that represent price going up, and the bearish one represents price going down. Do you understand? So this is where the candlestick anatomy comes in, which is the OCHL of a candlestick. Do you get it? So when we talk about the OCHL of a candlestick, we are talking about the open, the close, the high, and then the low. So this is the full meaning of the OCHL. OCHL simply means open, close, high, and low. Do you understand? So when we talk about open, close, high, and low, the bearish candlestick has where it opens, closes, has its highest point, has its lowest point. Same for the bullish candlestick as well. Do you get it? So the bullish candlestick, bullish candlestick opens at the top, at the bottom, opens bottom, and close at the top. And then the bearish candlestick opens at the top, open top, and then close at the bottom. Do you understand? So example, this is how it's going to open. Okay, let me write that down again. Bullish, open bottom, and close top. Bearish, open top, and close bottom. Okay, very good. So what this statement basically means is that you have a bullish candlestick opening at the bottom like this, and then closing at the top, and then you have a bearish candlestick opening at the top like this and closing at the bottom. Do you understand? Okay, and then when you have the wick in between the candlestick, the bottom of the wick basically represents the lowest point of the candlestick, the lowest point the candlestick got to, and then the highest point over here also represent the highest point the candlestick got to. Do you understand? So this is basically a bullish candlestick, open close, open bottom, close top, and bearish candlestick, opens top, close bottom. And then you have the wick in between, signifying the highest point and lowest point that the market went to. Do you understand? So that's basically the OCHL of a candlestick. Do you get it? And then we move on to time frame. So time frame is basically the representation of each candlestick. Time frame representation representation of each candlestick. So time frame is the representation of each candlestick, meaning a time frame represents how long a candlestick took to complete its OCHL, its whole anatomy. Do you understand? So if you're in the 5 minutes time frame or you're in the 15 minutes time frame, when you hear someone saying 30 minutes time frame or 1 hour time frame analysis, meaning in his analysis, every single candlestick you have over there took 1 hour to close, took 1 hour to open and form and create its highest point, its lowest point, and then close. Do you understand? It took 1 hour to finish its everything, its embodiment. Do you understand? So if I tell you I'm analyzing at the 15 minutes time frame, meaning every single candlestick over there takes 15 minutes to just completely form itself. Do you get it? So that's what the time frame simply means. So it's the representation of each candlestick we have, and then you can find the time frame also at the top over here. You can find the time frame over here. When you click on the arrow over here, you're going to have the list of the time frames we have dating into 1,000 ranges. Do you understand? We have from 1 second, even we have from 1 tick, 1 second, and some time frames are only available with TradingView Premium. You're not going to get them for free. So yeah, you need to also look out for that. And then the next thing we have is chart type. Okay, so chart type, a candlestick over here is also an example of chart type, but since it's the main thing we look at, we tend to explain that differently before we come and explain the chart type. So the chart type is also the same explanation as the candlestick, which is the representation of price. Do you understand? Price can be represented in so many forms. Do you get it? When you come to the chart type, which is beside the time frame, this is the chart type area. When you click on the small arrow, you are going to have a lot of chart types over here. We have the halo candles. Let me hold on, guys. Let me bring the chart down. Then you can see. Okay, you can see now the candles have changed into halo candles. They are being represented by halo candles. And then if you go to volume candles, I think that's for TradingView Premium. Yes, that's true. TradingView Premium. So when you move to the next one, which is line, you're going to see that yes, now the market is being represented by a line. When you move to line with market as well, you can see a lot of representations in the market. But we have just two main chart types we normally use, which is the line chart and the candlestick chart type. Do you understand? You can see I've placed a star beside them, I've favorited them. Do you get it? So the candlestick is basically used most often because that's where we get our confirmations from. It's used to get confirmations when trading the forex market. And then the line chart is used when you want to get precise levels when marking out your market, when trading forex. You understand? You use the line chart to get precise levels because when you go to the line chart, for instance, you're going to get the precise turning point where market was changing direction. You can see that you're going to get the precise turning point where market was changing direction. Do you get it? Yes. So those are the two importance of the candlestick and the line chart. Okay, let's move on to the next one, which is TradingView tools. So when we're talking about TradingView tools, you can find TradingView tools at the left side of your screen. These are the TradingView tools. You can find them at the left side of your screen. And as I said, we are going to get in on each and every one of them, the useful ones along the line when we start analyzing the market. But for now, these are my favorites. So you can also take a screenshot of these favorite tools I have on my screen. So you can also favorite them along the line. You are going to know the importance of each candlestick we have over there. Okay, so the next thing we have is how to add assets to your MetaTrader 5. So I'm going to take how to add assets and I'm going to explain watch list and red list as well over there. Do you understand? So watch list and red list are basically like where you have your trading instruments, your trading symbols, or your trading assets. Do you understand? Assets, symbols, instruments, they are all synonyms. So that's where you basically have all your trading assets. Do you get it? So I use this scenario when we're having a session that the watch list is like a fridge full of ingredients, and then the red list is like the ingredients selected to prepare a particular meal. Do you understand? The ingredients selected to prepare a particular meal, meaning you have all your pairs in the watch list, and then your red list is like where you have the pairs that you are ready to take a trade on. You get it? It's like a football roster that has a list of players at a particular football camp. But when it's time to have a football match, 11 players are being selected to play that match. So those 11 players selected are what we call the red list, and then the whole football roster at the football camp is what we call the watch list. Do you understand? So to add an asset to the watch list, you come to the plus over here, the upper right corner of my screen. You see we have watch list. You just click on the plus. When you click on the plus, you're going to have all the tradable assets we have. You can see we have stocks, we have funds, we have stocks, we have funds, we have futures, we have forex, which is currencies, crypto, we have indices, we have bonds. Remember, we have two types of indices. We have synthetic indices, which is only found on deriv, and then we have stock indices. Okay, so stock indices are the US 30, NAS 100, and other stuff. Synthetic indices is the volatility 75, boom, crash, and other stuff. You get it? We have bonds, we have economy, we have options. So mostly you just put it on all, and then you search for the asset you want to add. So you just type GBP USD, that's British pound against the US dollar. You don't need to bring the um 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 how do we call this symbol? You don't need to bring that over there. You just need to type the instrument without that symbol, and you're going to have it. And then when you have it, you can see on your right side we have a lot of brokers over there offering that same instrument. Do you understand? We have FXCM, we have Oanda, we have Capital.com, we have Forex.com, Pepperstone, ICE, IC Market, 8 Market, Black Bull, Vantage, Saxo, Fusion Market, a lot of brokers. If you scroll down, you're going to see a lot of them. But the one we advise you to normally use, the one I advise you to normally use is what? Oanda or FXCM. These are the two that I advise you to normally use. So all my pairs are mainly Oanda. So you just click on the plus beside it, and it's going to be added to your watch list. So all you have to do is scroll to the bottom, and you find it at the bottom of the list. So that's how you add an asset to your trading view. So the next thing we're going to talk about is indicators. Do you get it? So indicators are basically automatic assistance to the chart. Do you get it? So indicator or indicators, automatic assistant to the chart. Okay, so indicators are basically automatic assistance to the chart. So what this basically means is that indicators automatically do things for you. Do you understand? They do things for you in the market. Let's say you want to draw a support zone or a resistance zone or a supply zone or a demand zone or a trend line, or how do we call this, a long position. Basically anything you want to draw an order block or anything, you can find indicators over here. Okay, you can find indicators over here. So when you click on indicators, you can just search for the indicator I want to use. Let's say we need an indicator to automatically draw support and resistance for us. So just type support or resistance. You're going to have them over here. Do you understand? When you click on it, you have the indicator appearing on your screen. You can see that to automatically draw those zones for you. Do you get it? And when you want to remove the indicator, you come to the upper left side of your screen. You find the indicator over here. You hover your mouse pointer on it. Then you click on the dustbin to remove it. We have indicators for everything. If it's supply and demand, just type supply. You're going to have the indicators pop up. And the indicator that if you want to use an indicator, the indicator I advise you to use is lax algo. Okay, lax algo. That's the only indicator that I'll say is kind of accurate enough for you to analyze the market with. Apart from that, don't use anything else. You get it? I don't trade with indicators, so I don't advise you to also trade with indicators. So that's what the indicators normally do. They automatically help you to do stuff in the market. Do you understand? The accuracy percentage of indicators is around 40%. So I don't like using it at all, because you are going to lose a lot of money sometimes when you are following indicators. Do you guys understand? The next thing we are going to talk about is alerts. Okay, so alerts, basically, for those who joined the class, I did a live demonstration of how the alerts works, whereby let's go to market is closed right now. Let's go to the crypto market, which is open 247. Okay, the crypto market is open 247. Let's go there. Let me make a demonstration with the alert, because it's understandable that way. so that you guys will get the concept before I continue today's session. Okay, so let's go to BTC USD. I gave a trade on BTC USD, but okay, let's go to where we had our trade today. Okay, so this is it. So basically, BTC USD is moving right now. So what the alert does is that maybe you are working or you are a student and you are not by your chart. You just set, let's say you have a support level and you want to mark it out. So let's say we have this level over here, and we are expecting market to come to that level before we take our sell to the downside. All you are basically going to do is that after you mark out that level, you click on the level and then you go to the editing pane of the level, this particular editing pane, editing with the pane pane, editing pane. You're going to have the alert over here. You can see add alert. You just click on that and then you type what the message you want the market to notify your phone with. Let's say price at entry, and then you create the alert. Okay, so anytime price comes to touch that line, it's going to send a notification to your trading device, whether your laptop or your phone. If it's the same account, it's going to send a notification to both places for you to know that price has gotten to that zone and that you need to pay attention to it and come and take your trade. So let's see whether we can get a live demonstration over here. Okay, so you can see when price touches it, you are going to see that it's going to give me an alert on my screen or on my phone. Let me see, let me pull it up a bit. Okay, you can see that the alert is in. When you check the lower left corner of the screen, you can see the alert is in. You can see BTC USD in 15 minutes time frame, price at entry. So that's basically what the alert does. That's all the alert does. I hope you guys understand. Okay, so the next thing we're going to look at was replay. Okay, so replay is only available to TradingView Premium. That's why I don't normally talk much about it. We only use replay when we are backtesting the market. So you play back the market to the past chart, and then you backtest what you have learned. Maybe you have learned support and resistance. So the replay will actually let you play back the market. So when I click here, everything else from this side is going to vanish, and then I'll play back the market to practice what I've learned. Okay, so I've already talked about red list and watch list already. So, and I forgot to show you how to add a pair to your red list. So after you've analyzed the pair, let's say Euro USD, and I want to add it to my red list, I'll just right click on it, and then I'll click on the red thing over here. Once I click on the red thing, it's going to get added to my red list, and that's all. So that's how you add a pair to your red list. Okay guys, so that will be all for this lesson. If you have any questions whatsoever, just feel free to comment it in the comment section of this video. I'll see you guys in our next session, which is on Monday. Peace out guys. Go Slayer signing out.